Friends, okay, lots of updates for you this week on what the heck is going on in the housing market, what's going on with rates. I know there's been a lot of headlines, rate cuts, all the good stuff. I'm going to break this down in several videos this week and just talk through what is actually going on. P.S. If we haven't met, my name is Chelsea Winstead. I'm a home financing strategist and mortgage broker. If you are interested in buying a home in 2026 and you want to make a game plan, link on my profile is the best way to get started. Okay, so let's first start off. I'm going to go into several sections of this. So let's specifically talk about what the December 2025 job report said and what this likely will mean for mortgage rates, home buying behavior, etc. As a side note, by the way, two major things I always talk about that impact mortgage interest rates are unemployment levels and inflation. Those are the two massive contributors. There's a lot of other little baby reports. They're not baby. Other reports that come out that add to this bucket, but these are the two main moving factors that determine if the Fed will cut rates. And the Fed doesn't cut mortgage rates, but their behavior typically then has an indication of what we see in the mortgage world. So in the December report, the economy added about 50,000 jobs, which was below expectations. 2025 was deemed the weakest year for job growth since the early 2000s, about 584,000 jobs in total for the year versus 2 million new jobs in 2024. What's interesting about this, though, is unemployment in this scenario actually ticked down to 4.4%, even with the slower hiring. However, there were revisions to prior months' job cuts that totaled about 76,000 jobs, which means that the job market is actually softer than what we thought. So bottom line, strong unemployment numbers and weak job creation typically signal on a struggle in the labor market and the health. Now, I want to explain what this report will likely have an impact and what we can expect to see with mortgage interest rates because of this. So number one, the Fed is actually less likely to cut rates immediately based on this report. And the main reason is because unemployment did not actually jump. So even though that report is a poor report, the fact that unemployment actually ticked down creates a little bit of a divide. So if job cuts were on the rise and unemployment rate was increasing, so more people are unemployed, you would likely see a rate cut. But because the unemployment specifically did not jump, and because wages are still somewhat steady, the Fed essentially has less urgency to cut rates right now. And so what you're likely going to see is a pause. So big picture, that report, no dramatic rate drop because of this specifically. Now, if jobs continue to soften and inflation continues to cool, then yes, lower rates are going to be more likely further into this year. Big picture too, just a couple of notes. So, with weak hiring, people get more cautious about making big financial commitments like buying a home. So we can often also see a ripple effect because of that. Affordability balance. So wages have been rising modestly, which can help affordability. But as all of you know, home prices have dramatically increased over the past several years, which was due to crashes in rates. And so we're paying for that today. But if income growth outpaces housing cost increases, meaning home price values are now in a lot of places starting to flatten, not everywhere, but they are starting to flatten. And as income growth starts to increase, that can start to better bridge that gap, which means that affordability can be more likely for more buyers. So that's something that we're essentially watching and waiting to see. Again, softer job market also means that fewer job-driven moves are happening, which then is relocation for professional growth is can be a big contributor in the housing market. So with that, and the job market having softer factors, both buyers and sellers may, essentially be waiting a little bit longer until we start to see some improvement in the job market. The hard thing is that everyone wants to see a rate cut, right? Especially if you're buying, but rate cuts typically come on the other side of something not so great happening in the market. So, the fact that we have job cuts, people are unemployed, people are struggling, even though the unemployment, level went down, the fact that there are more job cuts happening, that's like a downfall, right? So like on the other end of that, there's a person that lost their job, which, it's just a hard balance, because again, you don't want to wish ill upon people who are trying to work and make a living for themselves. But when you want to buy a house, you obviously want to buy it at the lowest price possible. So, this is a constant, battle. And this is one of several video updates I'm going to be doing this week. I'm going to be doing a video here shortly on Trump's big announcement, on his push, and what that actually is going to mean. I'm going to talk about how rates drop below 5% and the reality of that. But I did want to give you some specific points here on the December job market report, because again, I think that a lot of people don't understand like the why behind things happening. And my goal and hope is to give you some insight into that information. All right, guys, see you soon.